Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. So let's see what's going on the markets. Let's see what we should expect today on the macro calendar and what happened overnight, what happened in the morning, what happened in the first few hours of the European session, because we are in the middle of European session right now. So let me switch to the chart, and I will show you the macro calendar first. Today it's all about FOMC minutes. So apparently we are waiting for, we are waiting for this data from FOMC. About any possible hints about interest rates rises in US, or for example reducing the balance sheet of Federal Reserve. So these are the events that we are waiting for. Also, we do have an important number for oil traders. So EIA crude oil stocks change pack of data from the housing market. So we are expecting for that. What we had already was GDP from Eurozone, which came slightly better than expected. And it had an influence on the euro, but not as big as the information from Reuters, which I will tell you about in a bit. And also cable was influenced strongly again. Now what we had was a pack of data from the job market, and that data came better than expected. So that is why British pound is doing a little bit better than other currencies. So what happened, what was the important influential data event for euro was that that what Reuters reports, sitting to unidentified people familiar with the situation, that ECB President Mario Draghi will not deliver a new policy message at the Fed's Jackson Hole conference. So because of that, euro was going much lower and is holding lower right now. Other than anticipation of FOMC minutes, and that data from UK and from US, and that information about Mario Draghi and Jackson Hole. Apart from that, we don't have any important market movers. So now we can easily move to the charts. And what do we have on the charts? Maybe we can start with this euro dollar. As you can see, we are still defending those highs from the August 2015. So again, the upper line of this yellow rectangle upper rectangle are the highs from August 2015. Lower line of this yellow rectangle are highs from 2016. So those two are strong supports, and this one was already tested a few times. After it was broken, it was tested as a support here, 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 and here, and they cannot break it. They go maybe deeper, so that's why I placed this line here to make it more accurate for the short-term situation. But as you can see, they tested that today in the beginning of European session. Now it looks like they're gonna test it for the second time today, or even they already did that, and still without a success. And this situation creates a nice buying opportunity. Maybe I don't see the best bullish price action here in the world, but the thing is that this situation gives a good risk to reward ratio. So for example, if you would go, if you would like to enter here with a very low risk, which is 30 pips, the first potential target is on 100 pips, 90. So potential profit is 3 times bigger than a potential loss, which is definitely a risk worth taking. I think that this line will, this dynamic resistance will not be as important as this horizontal resistance here, which is 120 pips higher, which makes it 4 to 1, right? That's a good one, actually, like that, which makes it 4 to 1, and this is definitely a risk worth taking. So even if we don't have a good price action here, it's still a nice buying opportunity, especially that the trend is bullish. So you're just entering with the trend on a possible bottom of the local correction. That's always a good place to buy. If the support will be broken, the next one is the lower line of this rectangle here, and the next one is here. So the next important one is 340 pips lower. So actually, if you're a trader and you're open-minded, you can think about going long here as a short-term situation, but after that, if your stop loss, for example, will be triggered, nothing happen, you can enter with a short position aiming this area. So it looks good for both sides potentially, but now I think that the buyers can have bigger chances for success. This is cable, and look where cable stopped, exactly on the trend line. This is where this downswing stopped. We missed like 40 pips for the correction equality pattern, and for the price to touch previous lows and 38.2 Fibonacci level. That's why I marked a checkpoint here, that it's a nice place to buy. But well, it's not said that we're gonna have a bounce here. Now it is the situation is still opened. I think we can still have a test of this area, and if here the price will create a bullish price action, that will be definitely a good signal to buy. I'm not into that hype about Brexit. I'm not a fan of those Brexit talks that UK will suffer after Brexit. I think they can do good, and I do believe in a stronger British pound. I don't have problems with that. American dollar to Canadian dollar is testing the 23.6 Fibonacci level. As you can see, this test was successful for buyers, but now the price is declining and it's testing the lower line of the flag. Actually, the breakout of the lower line of the flag and a comeback below 23.6, which is actually happening right now, can trigger a midterm buy sell signal, and also with good risk to reward ratio, because for example here stop loss will be 70, let's say it says 75 pips, and the potential profit for this is 280, so 4 times bigger potential profit than a potential loss. So that's definitely again a risk worth taking. If you're a price action trader, those are the trades that you should be looking for. I'm not telling you that exactly this technical setup, but trades with this risk to reward ratio are definitely those that you should be looking for. American dollar to Swiss franc stopped below a horizontal resistance here. We still have a high chances for breakout. Why? Because we do have this bullish engulfing pattern on a weekly chart labeled with blue color. So this is bullish engulfing, and we said that there's a buy signal here. and the price is higher and has a great potential to hit that dynamic resistance. And that dynamic resistance, and this horizontal one is 120 pips higher, so it's again a decent midterm trading opportunity. Euro dollar we already discussed. We have Australian dollar to American dollar, which is much stronger, but I would like to show you. Okay, this week we have to wait a little bit. Okay, as you can see, overnight, Wednesday overnight we had a data from Australia, Westpac leading index, wage price index. That data came in line with expectations. Now we're heading higher on Australian dollar to American dollar. For example, Australian dollar is much stronger than euro, for example. But here this bounce happened in a very interesting place, and you shouldn't be surprised with that, because I think yesterday on a daily analytical report we marked this place as a potential good support, right? This yellow area, and look, that's just amazing in my opinion that price tested this level, this area with a great accuracy. Here we had the crossing of lower line of the flag and the uptrend line. Look, and price tested that and went significantly higher. So from the bottom the price went already 60 pips. Why this support is important? Well, it's an uptrend line, and it's also at 23.6 FIBO. It's also a high from 2016. And it's also a lower line of the flag. It's also a resistance from here. So here we had a great combination of supports, and the price respected that. But for the full buy signal, what I'm missing here is a breakout of the upper line of the flag. Well, flag, by the way, is a trend continuation pattern. So as long as we are inside of the flag, this uptrend should be continued. I think that the price has big chances for price has big chances to break the upper line of the flag, and from this point we can start the uptrend. Next one is euro to Japanese yen. Okay, for buyers it's a good situation. Why is that? Because they can see this inverse head and shoulder pattern, left shoulder, head, and the right shoulder. A yellow area is being a neckline here in this situation. We also broke this line connecting recent lower highs, so it looks all promising, especially that the bottom of the head bounced off the horizontal support here. Even despite the fact that we broke the uptrend line, we have to notice that this uptrend line is very steep, as this upswing was very strong. And actually, in my opinion, as long as we stay above 50% Fibonacci, which is this green area, the sentiment is positive on this instrument. So what buyers see is this inverse head and shoulder formation on the H1, right? And I do not blame them. As long as we stay above the yellow area, the sentiment in the midterm is positive. What sellers probably see is a situation on a D1, for example, maybe a little bit closer, where we do have a left shoulder head and possibly a right shoulder, with right shoulder ending with a shooting star candlestick, right? So for the sell signal, all they need is the price breaking the first horizontal support, this green one, not this yellow one, but this green one. And price breaking the green support here should trigger a sell signal worth almost 500 pips. So pretty significant sell signal if you ask me. But this sell signal is not here yet. This sell signal will be here below this horizontal resistance. So far we are under the influence of a short-term inverse head and shoulder formation, but possibly we can get a long-term sell signal here. American dollar to Mexican peso situation is not so. Maybe let's move this trend line here to be more accurate with those highs, which well, still this horizontal level can be significant here, and as long as we are below this level, the sentiment can be perceived as negative, but that's not a strong signal in my opinion. American dollar to Japanese yen is struggling below 38.2 Fibonacci level, which is a strong resistance. As you can see, price tests it with a great accuracy. Here it was a support. After the breakout it became a resistance. It's 38.2, which almost always is important. So the situation here, what will happen with this resistance should influence the midterm movements on this instrument. So a bounce from it should trigger a sell signal, and a breakout of this resistance should trigger a buy signal. So we'll carefully watch this area for a good trading opportunity. Now, precious metals, gold is having a correction equality pattern. As you can see, the price stopped exactly after making the same correction in terms of depth, not in terms of the length, but in terms of depth. We stopped here. We are trying to defend 23.6. But as long as we stay above the red area, the sentiment in the long term remains positive. Why the red area is important, you can see here it's 38.2 Fibonacci of this uptrend, but it's also historically important in the midterm because it started at the end of May. When we look at the price swings from the end of May, we can see and that the price is respecting this level. First it was a support, then a resistance, then a support. So it looks like a decent area for a bullish stronghold, even if they won't hold to 23.6 and the correction equality pattern. It won't be a biggie. It's not a big it's not a very significant sell signal. But significant sell signal we do have on silver, which is below 16.8 again. 16.8 is a very important support and resistance here, as you can see, especially from the beginning of June, but it's for a longer time. So it was a support for the last few months. It's a resistance again. In the short-term situation, what do we have here? I'll have to change to 15 minutes. I'm not using that for trading, but just to show you that we do have a much lower volatility at the moment on the market, and it's a pennant. Pennant is a trend continuation pattern. A trend is bearish in this time frame. So from the pennant, we should see a breakout of the lower line of this formation, and further downswing. That's what the technical analysis is suggesting on lower time frames. But well, for me, it's not a sell signal because I do not believe in the smaller time frames lower than H1. But I know that many traders do, so I'm showing them how the situation looks like on H1. I don't want to say that trend is that the situation is bullish on silver, because it's not, right? So it is still bullish on gold. It's not bullish at all on silver. As long as we stay below 16.8, we cannot say that there is a bullish situation on silver, because it is not. S&P 500 stopped a little bit, right? So we had that few nasty sessions like on Friday, Monday, Tuesday, and on Tuesday we had a correction of this huge movement on Monday, and now we're having we entered the sideways trend situation. So losers are licking wounds, winners are counting profits, and those wounded here are sellers. Those which are counting profits are buyers, because we do have this V-shaped retracement here, which is kind of typical characteristic for the American indexes, especially S&P 500, so we shouldn't be surprised that this situation is happening. As long as we talk about indexes, let me switch the account, and I will show you the oil and DAX, maybe DAX first, because what is DAX doing? They came back above this horizontal support, so that was false breakout, and now is trying to come back above the upper line of the wedge and this horizontal resistance here. And actually, if they will manage to do that, that's a buy signal here. So there was sell signal here, which is very short-term occasion, but it was strong enough for the sellers to open short position here and already move the stop loss order to the stop profit order, or to the break-even point. So if you open the short transaction here and you didn't manage to go to at least the break-even point, it's your trading. That's a mistake in trading, right? Because you shouldn't allow such profits to vanish, right? But I'm talking about that, I'm teaching that on a live trading session. So be sure not to miss that. So what we are having here is a false breakout below the support, which resulted in a strong movement in the opposite direction, which shouldn't be a surprise. We are very close to the upper end of the wedge, and breakout the breakout of this horizontal resistance and this upper line of the wedge should trigger a buy signal on DAX. Next one is oil. Oil, which used this rectangle to go lower, broke the trend line, and recently used the horizontal support as a resistance and an uptrend line as a resistance. So as long as we stay below that area, the sentiment is negative. Breakout of that area should trigger a buy signal. That is why I'm gonna place a thumb up here, because comeback of the price above that resistance should trigger a buy signal here. Now we can come back to our Forex account. Euro to Australian dollar. That's why I'm highlighting a potential support here, but I'm telling you that it would be much better if you waited for the price action here, for the bullish price action here. Here we don't have any, right? There were no bullish price action here whatsoever, so that was just a potentially nice support, but it did not result with an upswing, right? It did not result with a reversal. So the next potential support is here, created by those lows from the August, from this month. I would say that, well, the sentiment is still positive, because we are defending on the lower line, on the upper line of the flag, and I would even extend it here. As long as we stay above the gray area, the sentiment is positive. I wouldn't say that as long as we stay above the green area, because that would be too deep inside of the flag, and that actually would be false breakout from the flag, which is usually perceived as very negative. Dollar index is showing us that dollar is a bit stronger at the moment, so we had a breakout of those three downtrend lines, and now we're using a horizontal level as a support. As you can see here, it was a resistance here. After the breakout it became a support, and as long as we stay above this yellow area, the sentiment in the midterm is positive. British pound to Japanese yen, actually a very beautiful inverse head and shoulder formation, but what we are missing here is a breakout of a neckline, which I just draw maybe with other color, not to confuse anything. It can be red, why not? So yeah, this is inverse head and shoulder formation, but as long as we stay below the neckline, there's no buy signal here. Breakout of the neckline should trigger a buy signal on this instrument. New Zealand dollar to Japanese yen, inverse head and shoulder formation as well. So you should not be surprised that here we do have an inverse head and shoulder, here we do have an inverse head and shoulder, and also on euro to Japanese yen we have an inverse head and shoulder formation, right? But on those on euro to Japanese yen, for example, we broke the neckline already. Here we are struggling to with this. Okay, here nothing. I don't want to waste your time with setups which are not significant. Here, New Zealand dollar to American dollar, we are defending this horizontal support. This can be potentially a nice place for a bounce. We can bounce from this horizontal support, but also from the upper line of the flag formation. Euro to British pound is still heading higher. We still do have a full buy signal here. And Australian dollar to Japanese yen, I don't want to we bounced from the first horizontal support here, but the sentiment is still negative, especially if we switch on a weekly chart where we bounced of this horizontal resistance with two shooting stars here. So even despite the fact that we do have a rise here, the sentiment is negative. It's simple as that. Let me show you again, British pound is going lower, American dollar to Canadian dollar is about to trigger a sell signal, so watch out for that. Euro dollar is defending this line, Australian dollar to American dollar is aiming the lower line of the flag. Euro to Japanese yen is trying to defend the neckline, so these are very interesting trading setups, and you know what you can do now with them. I told you about possible scenarios. I'm very curious what will happen with gold, if they will use that 23.6 or they will go deeper to 38.2. It does not look like a nice reversal, so they can go deeper. Actually, they can go deeper. Okay, my friends, thanks very much for watching Daily Analytical Report. I hope that you found something interesting for you. And now we're having a short break, and after that webinar about MetaTrader 4. Thank you very much and goodbye.